Hey everyone, this is Rob Beardsley. Thanks for tuning in. This is a consulting testimonial where I get to talk one-on-one with a personal client of mine, and we talk through their journey and their experience working with me. So without further ado, I'd like to introduce you to Christian Bergman and let himself give a little background.
Yeah, so thanks for having me on here, first of all. And kind of my journey, I was a professional baseball player for 10 years, was, involved a little bit in real estate and, mostly all single family stuff, single family rentals. And once I retired in, let's see, the middle of 2019, kind of went down a couple different paths as far as what I wanted to do in real estate. Vaguely knew that it was possible to transition from single family to multifamily, and that's how a lot of people did it. Problem was I didn't really know at the time how multifamily was structured as far as partnerships. I didn't even know any of that existed. So went kind of down the single family flipping path. Found out that I hated that, so quickly transitioned out of that. Started reading more about multifamily and uh, found your book on underwriting. And for some reason, I'm kind of a data driven, analytical person. So your book really hit home with me, and I really enjoyed it. It was a deep dive into underwriting and that sort of thing. And because some of the other resources out there, they almost make it sound a little too easy. And that didn't resonate with me because it's like, no, it really can't be that easy. There's got to be more to it than this. So anyway, that's how I found your book. And I'm trying to remember now. I think I reached out to you after I read it and just said, that I really enjoyed it or something like that. And coincidentally, you were in Scottsdale at the time. So I think we met up the next day, and I didn't even know that you had a consulting program. So once I found that out, like it was almost a no-brainer. I kind of told you my goals and I asked you how long it would take, and I think you said like 3 years. I was like, all right, I'm in, because I just came out of a 10-year baseball career, and it took basically 6 years to get to the ultimate goal, which was to get to the big league. So um, yeah, 3 years is nothing to me.
Yeah, I remember that. I remember you had the big master plan. I was like, really? I think we can get that done in 3 years. Um, so well, I mean, we're not there yet, so there's definitely some more
Yeah.
more work to do, but it's fun to have goals and chase them. So you mentioned you had some single family experience while you were playing, and had some ideas about after playing, jumping into more real estate, possibly multifamily. So talk about, I think what's really interesting, and people ask me, what is the biggest barrier between single to multifamily? Because it's such a transition, popular conversation. And I emphatically say the biggest one is simply just a mental one, a mindset thing. So you can't just have a mindset, right? You have to back it up with
Yeah.
knowledge. You have to back it up with relationships and things like that. So talk about the process of building up the mindset, the relationships, the knowledge.
Yeah. So what you had said is basically the exact path I went down, and that was um, first you have to wrap your mind around the fact that you're not looking at stuff that you can afford. And to be honest, I actually started breaking down that barrier in my mind first with, this probably won't shock you, Grant Cardone. But he was one of the guys who it's like, no, it's really not, it can't be that easy. Maybe it's easy for you at this point, but he's very good. The whole 10X stuff, like that's, honestly, I think everybody could use that, whether you're doing real estate or whatever. Doesn't really matter. You realize that the only real barrier to what you want to do is in your mind, because then it's just taking action. Once you break down that barrier, then it's just taking the steps necessary to get there. So, I kind of was going down that path first, and I was looking at 6, 7, 8 unit stuff. Again, I hadn't completely blown that barrier down. I probably still haven't, but I wasn't to the point where I was now. But like you said, you also need to back it up with knowledge. So broke down the mental barrier, but didn't have the knowledge. Obviously coming from a sports background, I understand the value of mentors and coaches and stuff and how they can turbocharge, the learning curve. And like maybe all this information is out there for free. I don't know. It probably is. Well, technically it is with your book. um, so, but that's only one piece of it. Like you don't get the constant interaction with the actual author of the book. I mean, that piece right there is, almost, you can't even really calculate the value on that, because having the ability to bounce questions off of someone with more knowledge than you about a certain topic is, that's where the real learning starts. Because like, I'll never forget, I was reading, I read your book the first time, like, oh, this was awesome. And then once we started going, having weekly calls and stuff, you would say stuff and I would go, oh, that's what that meant in the book. Because I read it in the book, maybe sort of understood it, but then it took multiple conversations with you to really lock it in and understand it at a deeper level. And I can actually give an example of what it was. It was the spread between the market cap rate for a stabilized property and, for a value add type deal, when you're bringing, you're improving the operations and stabilizing it. If you bring it up to the market cap rate, you didn't create any value. You just took on a bunch of risk without actually creating something above and beyond. So I read it at first, but didn't understand it. And then after talking again with you, it was like, oh, so if if market cap rate is 5.25 and I'm operating at 6, there's a spread right there. That's what we're looking for. So that was really, like, I would say the at least a piece of the knowledge that I needed, in addition to breaking down that mindset barrier. Just knowing that you were kind of there in the background also gave me the confidence to go outside of my comfort zone and go way bigger than 8 units. So I guess we can get into now the actual deal that we did. And if you were to ask me a year ago if I thought I could do a 46 unit deal, I would have thought that was insane. But again, knowing that you were kind of in the background and, looking over my shoulder, making sure I wasn't doing something too stupid, is worth a lot as well. So, yeah, again, how many 8 unit, it would take 5, almost 6, 8 units to get to the point where I am sitting here today. And we're what, 9 months from when we first, met. So, the value that you provided through your, consulting and stuff provides way more value than the actual cost, to put
Right.
it that
That's
way.
definitely the goal. Yeah.
Yeah.
So I think knowledge, like you said, I mean, knowledge can really be obtained for free for the most part these days. Right. And so there is some value in kind of packaging it up, giving it context, and something that I always urge people to do if they're, if they want to learn, they want to get involved, is start doing and start actually, if you want to underwrite, well, get deal flow. And if you want to get deal flow, it's, if you want to get better at getting deal flow, well, get in there and actually start talking to brokers and doing those things, one step at a time, that will get you where you want to go. And that process of learning, and like you said, it took you to, I mean, when you're reading things, you can read things, but then when you see the deal and then you have context, okay, here's the actual deal, and then here's the idea behind it, and here's how we look at it. I think there's value. And then, like you talked about, the deal that you just closed, having that context of, because there's always, I mean, with real estate, there's just a million things that come up, and you can't just plan for everything. It can't all be scripted. It can't all be just in a textbook. And so there's just all these things that you want to be prepared for, but you can't always really be fully prepared for without the experience. And so I think that was an interesting point. And then I think something that is arguably the hardest thing practically is raising capital. And I think one of the reasons why it's hard is because it takes time. You can't just overnight build all these relationships, build trust, trust takes time. These things take time. So I think so that makes it really hard. And then the mental part about it is really hard. A lot of people I talk to, they say, I can't raise money, or I don't have the network, or I'm not good at it. So I think there's a big mental block about going out there. First of all, of doing a deal with other people's money to begin with is a huge mental block, that you kind of have to wrap your head around, get comfortable with, understand, and then from there it's actually going out and doing it. So you were, I'd say, extremely successful, and went about it the right way, and had to obviously work hard, like everybody else. But talk about kind of the capital raising experience. Talk about maybe what I did, what I didn't do, and kind of how your experience went.
Yeah. So one thing that you didn't actively do, but was very helpful was your model, the sensitivity analysis in there. I got multiple comments from people that I talked to, whether they invested or not, it doesn't really matter. Who, when I put together the pitch deck, I included your sensitivity analysis that stresses the property, stresses the operations, interest rates, all that stuff. And I got some comments from some pretty sophisticated people who look at this stuff often that said, "Wow, the fact that you put that in there is we really like that." I don't know if that had an actual tangible, that's what caused them to invest in the deal. I don't know, but I did get a lot of comments about that. So, if I was trying to do this on my own, like I said, first of all, I wouldn't have been able to go this big. Second of all, I didn't have the context of, there's a few different pieces. There's the actual underwriting, the deal flow, the capital raising. There's all these pieces that you need to be kind of doing all at the same time. And without that context, I mean, I think I, I think I told you after we closed that without you there, it would have been an absolute dumpster fire. And it's true because, you know, because I was able to put together a professional looking pitch deck with stuff in there that was even beyond their expectations. That was just that all came from you. I wouldn't have known to do that, and even if I did, bump my way into it, it probably would have taken a lot longer. Whereas it's built into your model. It's already there. I just copied and pasted it in.
Right. Yeah, and there's a lot of shortcuts. That's a great example, but we've got shortcuts for the pitch deck. We've got shortcuts for the legal
Right.
documents, kind of the legal structure, and trying to think of more shortcuts. I mean, now that the deal's closed, uh, of course there's shortcuts for the okay, how do we interact with the investors on a monthly basis? What should the quarterly reports look like? And, just I think having that there is, definitely makes life a little easier.
Yeah. And, to kind of go back to your question, the capital raising was, I'd say, the most difficult part. Like I said, you're just that one piece in the model probably helped a lot more than it actually seems. Um, but the process was difficult, and it definitely took longer than I thought. But it again, it because I was going to a point where I was out of my comfort zone, and it's not like I could just, if all else fails, just fund it myself. you know, that was never an option. So I had to continually, be looking, and where the places we ended up getting investors from, um, I couldn't even fathom that 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 I would have had people from these areas investing with me. So again, having you to almost kind of backstop everything and at least give me some guidance, and that part is invaluable. And there's a ton that I learned just in the actual doing of all this stuff, that, like you said, it's almost impossible to put it all like in a book or in a
Right.
course, or you can't plan for all this stuff. So again, the value of the conversation, the weekly, or sometimes more, sometimes less, depending on how it is, what's going on at the time, the value of that is just incredible. So yeah.
Cool. Yeah, I think some of the other things to touch on is the debt side. In some ways, you could just anybody can just hire a broker and then have the debt taken care of. And I know you are interested in actually understanding the debt side, and and, and even if you do just hire a broker and let the debt happen, come together, I think you're missing out on optimizing things and making sure it works out. I think, as you saw, it can be straightforward, but even on a straightforward deal that we thought we had, okay, we got a straightforward deal. We had to deal with improvising with the appraiser, working with the underwriter, and so there's a lot on the debt side, I think, as well, that's going on. Um, that's important. And then as far as relationships, obviously the lenders are a component of relationships. Another relationship aspect is the cosigner. 99% of the time, a first time sponsor is going to need a cosigner, whether they need it for satisfying the lender's net worth, liquidity, or experience requirements, right? Even, sometimes they even won't take a guy with high net worth because they just have never managed real estate before. So that is also a relationship thing, and building up those partnerships. And I think the way that your deal came together was really good as far as that goes. Yeah, so I think some of those things were interesting. I don't know if you have any other thoughts about that.
Yeah, I feel like I didn't have to do very much on the debt side because not that we like drew it up this way, but that's just kind of how it was going. I didn't have to do a whole lot on the debt side. It was pretty much providing documentation and getting all that stuff. But I feel like I would have been lost if I was trying to do that on my own, because it at a high level, it seems like putting a deal together is pretty basic and not a lot of work. And once you get in there, like your hands are full doing stuff, and to not have to worry so much about the debt side, knowing that I had someone with experience who had an existing relationship, was a huge help on that side. So again, definitely worth it, and made my job and made putting a deal together a lot easier.
Yeah, something that I would like to be of more value in the future, and I think it will become more applicable in the future as well, as you do more deals, build up your experience level, is being able to help with capital introductions. And so for me, I've got relationships that range from kind of my individual investors, which they are too small, and it doesn't really make sense to try to, unless I'm going to formally do a capital raise. It doesn't really make sense to try to funnel those and use those relationships. But then there's capital raising businesses or individuals that make sense to make those connections. And whether it's an individual, a capital raiser, or obviously an institutional investor like a private equity firm, they want to see experience and all those things. So it's particularly hard on the first deal. But like I said, as experience builds, I'd love to see you and my other clients benefit from introductions to some of the private equity firms and funds that I know, and put a deal together. That would be amazing moving forward. So that's something that's on my mind, to be more valuable in the future.
Yeah, I think that would be huge. And you know, even if as a first time sponsor, you were lucky enough to come across some of these people, and even if they like you, they may not be willing to actually partner with you because you don't have the experience. But having, knowing that we have, a prior relationship, and that, I was in a sense taught by you, probably lends quite a bit of credibility to that, and will make those potential partnerships even a little more likely than if it was just some random person that they didn't know.
Right. Yeah. Especially those relationships, a lot of them, depend on who you were introduced to, and something like what you said can definitely speed up that process, because with any sort of capital raising and trust building process, it's particularly long with the more, large check writers, institutional groups, it's just a huge process. The first group that the first family office that we did a deal with, they passed on a couple of our deals, and they basically just said, hey, we like this one a lot, but we're just going to wait on this one, and hope that you call us up in 6 months or a year and say we proved you wrong. Right. So they're very patient. They're uh, very conservative. So it's a process that you want to start as early as possible, and that's something else that I talk about in other videos and whatnot, is getting that process started before that you really think you're ready, because why not? And even they might turn you down now because of lack of experience. The deal is bad or whatever they say. It's just reps, getting to know them, and that's one of the great ways to learn also from the investors trying to pick apart your deals, and then you can also learn about what investors are looking for. So yeah, that's another topic and another important thing to do. But yeah, so I think that's all good stuff, and I don't want to make this too long, but really appreciate you jumping on and sharing your thoughts here. Uh, if there's anything else that you want to share before we sign off, go ahead.
Um, I think I think a good way to close it out would be that um, I don't think it's I don't even see how it would have been possible for me to do this deal or anything even close to it without all the different pieces that you provided that we talked about over the last 20 minutes or so. All those different things coming together is what allowed me to do this deal. So anybody who's even considering wanting to do something like this, I think it's almost maybe a requirement to have someone with your level of experience to do it if they actually want to do it. So, those are my thoughts, and I had a great experience, and looking forward to to what's coming next.
Awesome stuff. I greatly appreciate that, and let's keep it moving.
Yep, sounds good.
All right, thanks.